Now, let me address the issue about the perception of low return, high fees. Now, transparency in the financial service industry, it rests the most in the MPF system, where you get a very high level of transparency in level of fees, breakdown of fees, fund expense ratio, performance figures. Is released every day and also released by the regulator. So people look at MPF performance very, very short term. They think it's more like it's speculative, but retirement is long-term money. So in terms of fees, there's no other financial instrument. They really have to show the fund expense ratio. So with MPF, we have to show this number. But this number has been decreasing from about 2% to now about 1.5%. It's not an insignificant reduction, but people still think is high. But MPF is a relatively young system. It's about 19 years old. A mature system takes about 30 to 40 years. And secondly, so in terms of comparison with other countries, it's high. High compared to what? Which countries? High compared to what? Retail funds? But there's no comparison with other different countries. But in terms of compared with retail funds or other instruments, those other markets don't have to show the kind of detailed disclosure as an MPF. So it's really, how do you call it high? There's no comparison, equal comparison. So it's more perception. Now, in terms of performance, now, Hong Kong system is a member-based, member choice. Hong Kong, we have very bipolar, either very speculative, mostly in equities, or very conservative in money market fund or conservative fund. Both of them are useful at different stages, but you find a lot of young people going to a conservative fund, which is not an appropriate choice because they have 30 years, but they think MPF is retirement money, they need to be more careful. So they don't know how to choose funds, and also they choose inappropriate funds. And so that's why we have this default investment strategy to help people who don't know how to choose, so they will use the DIS. But for many people who don't choose, they still choose. As a result, they're maybe in the wrong fund at different stages. So in terms of performance, another factor is investment restrictions. We are very confined in terms of restriction into developed markets, primarily developed equities, very high-grade bonds, and deposit money market. But in many other countries, the asset classes are very broad because it's a 40-year investment. So you can alternatives, you can use derivatives, you can have real estate, private equity, you will have infrastructure. All those different asset classes provide a diversification of risk. In Hong Kong, we're pretty much concentrated in traditional, very developed markets equities. So these two markets, in developed markets in equities as well as high-grade bonds, the correlation over this past 10, 20 years have been very, very low. That means correlation is very high because if one move up, the other also move up. We should have instruments that have low correlation, so when some particular asset class or market had a tough year, other instruments have to offset or reduce the volatility return. So investment restrictions and also the mismember choice, people choose a lot of equities. And equities in Hong Kong and China around the world is considered a very high risk categories, so it has volatility. But if you look at returns, as of December 2018, the MPF system generated an annualized return of 3.2% since inception, net of fee and charges. This is the statistics of the MPFA, the regulator. Out of the total AUM of about 813 billion, about 23% of that AUM come from investment return. So in terms of performance, it is not a bad performance.